And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts. Presented by RIA Advisors.
AI is absolutely going to displace some of these companies. There's no doubt about that. But there are going to be companies that survive, benefit, and grow coming out of this. And the goal is, if we can buy some of those companies cheaper, we're going to make good money with that. And isn't that our goal? Our goal is to buy stuff cheap and sell it rich. We tend to do the opposite of that because that's human nature in the markets. But those are the type of things that we want to do. So anyway, the purpose of the conversation this morning is just to talk about this narrative last week. As there was a lot of selling pressure last week, there was a lot of discussions and emails and things going around about why this was happening and all this. As I said earlier, a lot of that smacked as just basically margin calls. That is, and I kind of just wanted to show you this one chart because I've written about this previously. And when you take a look at the amount of margin debt versus DPI, which is disposable personal incomes, it was at a record level. Now, I don't have the updated margin debt levels yet because of what happened last week. They published with a lag there's about a 1 or 2 month lag from FINRA on the margin debt levels. So we'll see probably in March, maybe early April, we'll see what, if any, of this margin debt was unwound in February. But going into this, we had a record peak of that margin debt. So, and again, I like looking at margin debt as a percentage of DPI because if I'm running out, so if I have cash to invest, I'll invest my cash. If I run out of cash and I want to buy more, I go into margin, right? Because I can leverage my account that way. And so the more money I have, the more money I can put in. So real DPI is declining, which means I've got less disposable income coming in the house. And that's important because when the margin calls come, I have two options. I get a call from the brokerage firm. The brokerage firm says, hey, Mr. Roberts, you have a margin call on your account today. You need to either put in, X amount of dollars by the end of the day, or you need to sell something to rebalance your margin account, or we're going to do it for you. And this is the thing about margin debt that a lot of investors understand is that it's not optional. The brokerage firm doesn't call you up and say, hey, I'm going to give you 48, 72 hours to, fix this margin problem in your account. It is by the end of day when that margin call comes. So when that margin call comes, it comes very quickly and you're forced to sell assets if you don't have other cash to invest. And again, with real DPIs declining, there's a lot of people in the markets today that are leveraged without cash reserves because they've been chasing the markets. And I saw this, this is a sad tweet, but I'll share it with you. This was a tweet on, there's a little bit of profanity in the tweet, so I apologize, but it's just what it is. But this was a tweet that was out on Thursday. It says, I lost it all. So many years of efforts vanished in a matter of minutes. This was account leveraged in silver. Down $1 million in his P&L. That's in a day. That's margin. That's what margin does to you. Margin and options and leverage and those type of things, you clipped off the P&L statement, but it's fine. But that's what happens when you leverage an account with options. That is a binary outcome. If you are wrong, it wipes you out. And this was not uncommon. The number of posts I saw from the sell-off last week on X were many. I saw many of these where there were very large, substantial losses in accounts because of the unwinding of leverage last week. That's the risk of investing and speculating that we warn you about all the time. And our goal is not, it's great and it's fun when things are going up and we're making a bunch of money. That's awesome. It's so much fun. It's going to Vegas and gambling, right? And hitting it. It's a blast. It really sucks when it runs in reverse and you lose it all. because that happens a lot. And and this is always the interesting thing to me is that when I talk to younger people, Gen Z, millennials, they're like, "Oh, you're a boomer, you don't understand. Things are different today." In the late 90s, everybody was doing the same thing. It's like my kids coming to me and they're going, "You don't understand, Dad." It's like, yeah, I understand exactly. I was doing the same stupid stuff back at your age as well, thinking there were no consequences. I'm just older now and I understand that there's consequences to these actions. So a lot of times we warn you about things. We say, hey, this is building up in the market. These are going to have negative outcomes. And then when they occur, everybody goes, well, didn't see that coming, right? You can see this coming. Just pay attention to the risk. And this is why we focus so much on managing risk in portfolios, those type of things. Anyway, this article is on the website this morning, just talking about this kind of speculative sell-off last week. And for younger investors, can you bring up these 5 bullet points for me, Brent? For younger investors, if you're just starting out, this is comments from a boomer. Because I've been here, I've done that. I have speculated, I have lost, I have traded, I have lost, I have done. There's nothing that you're doing in the markets today that I haven't done numerous times before. And the important one is don't confuse confidence with experience. Just because markets are going up and it seems like making money super easy, that's not experience, that's just overconfidence. Experience is what you learn when you lose a bunch of money. And that's what you learn by making mistakes over time. And again, I've been managing money or investing in markets or raising capital for markets for 40 years now, and 35 years. We're getting close to 40. My birthday's this year. But for 35 years. And I've been through all these cycles. I have been hit by these cycles. I have been hurt by these cycles. I have been through this, and I learned from those cycles not to do certain things, which are the things that I relay to you here on the show as saying, look, the things that I talk about with you here on the show are not just stuff I'm making up. Most of this is just personal experience that I've been through, and I'm just relaying my experiences. Like, I've done that before. I know what the outcome of that's going to be. You can see it as clear as day when you have experience. Sometimes that's hard when you have confidence from a market just seems to go up all the time. Diversification is the only real way is only when exposures are uncorrelated. We've warned about this before, is make sure that your exposures in markets are uncorrelated. When everything is going up in your portfolio at the same time, that's when you want to worry. Because when everything goes up together, they go down together. And that's not the place you want to be, particularly if you're on margin. You don't want to be in a highly correlated account when you're on margin, because when that unwind occurs, it's going to hit all your assets at one time, and it's going to bring that margin call a whole lot faster to your account. Manage your risk first, foremost. If you manage the risk, the rest is easy. Does that mean you're going to give up some returns? Yes. Does that mean you're not going to make as much as you could have? Yes. You're also not going to lose as much as you could have otherwise as well. Leverage amplifies returns in both directions. A lot of people learned that last week. Margin and leverage are great when everything is rising. It helps, gives you more buying power. You can make a lot more money. It's fantastic, but it also amplifies the losses. And then lastly, just accept corrections as necessary. And this is why when things are going up, learn to take profits. You can take this down, Brent. Learn to take profits. Learn to rebalance your risk. Learn to rebalance portfolios. Again, is it going to limit your returns? Yes, it is. You're going to give up some returns, but it's also going to limit your losses. So one of the most important lessons that we can learn as young investors is learning that when enough is enough. When you make some really, really good money, put some of that away. There was a story we wrote about the gentleman in Canada that was trading stocks and had turned a few $1,000s into excess of $100 million and then lost every penny of it. This was back in 2021, 2022. Leverage, options, everything. Had over $100 million, right? I mean, at $100 million, you will never worry about anything the rest of your life. Your family will never suffer for anything at $100 million. But he kept going, right? When I got to $100 million, why didn't you take $20 million of that and put that in some T-bills? Even at 20 million, your family is never going to worry about anything ever again. And if the other 80 million goes to zero, you still have 20. Or put 50 million, and you have 50 million in the market to speculate with. If that 50 million goes to zero, you still got $50 million sitting in the bank. But he didn't learn when enough was enough. He let greed dictate his trading. His confidence overwhelmed his experience, and he wound up losing it all. That's the lessons you want to learn. Learn, and the most important lesson here is just to learn when enough is enough. When you've made 10 or 15 or 20% in the markets in a given year or more, you make 100% in something. You know, one of the first rules in investing is that when you double your money, you take your principal out. And then that way you're just playing with house money. So if I make an investment and it doubles in value, I put $1,000 into an investment, it goes to $2,000, I take my $1,000 out and I trade with the $1,000 I have left. That way when that goes to zero, I still have all my principal left. And the whole goal of investing is to protect your principal, because once you lose your principal, you're out of the game. Game's over. As long as I can maintain my principal, maintain my core, the corpus of my investment structure, I can survive the long term. But as soon as I speculate and gamble and I don't protect that principal, that's how people at poker tables and everybody else, you go to the poker world championships, right? They go all in. They lose, they're done. It's the same thing with the markets. You lose, you're done. So protect yourself, and you can win the long game. And that's ultimately the end of that's the end of everything, is to survive the long game of the markets. The markets are going to go up, they're going to go down. We're going to have big crashes, we're going to have huge rallies. The question is, can you survive the long game? A lot of investors don't. If they did, there'd be a lot more rich people in the world.
This weekend, so speaking of raccoons, we had some raccoons at our house too this weekend. So our oldest daughter and her fiance, they're engaged.
He finally popped the question.
So he, as we were getting towards the end of last year and we were getting towards Thanksgiving and the end of year holidays, Christmas, we had some time where he pulled me aside and he asked me for her hand. Of course, we said yes.
But he was waiting for like the whole perfect setup, right?
So he was wanting to propose. He wanted to get all of our families together. So we're all here in Houston, and his family's all in San Antonio, and he wanted to get us all together for this incredible, magical moment. But just to get all the families together, it would have taken forever. I said. So he called me right before they've been dating for 6 years.
Okay.
Long time, but they've been dating for 6 years, and he called me the weekend. Prior to the weekend of their 6-year anniversary, and said, hey, I'm just going to pop the question. I'm trying to get everybody together. And his name is Ben. I said, Ben, you have our blessing. Just do it. Mm-hmm. I said, just seize the moment. And so now they're engaged. So we're planning a wedding for.
So the good news is after 6 years, she said yes.
So after 6 years, she said yes. Yeah.
If there was any doubt.
Is there any doubt? So she said yes. So now we're planning a wedding for sometime early next year in 2027. I'm just standing out of the way. I'm just getting out of the way. So, but we had some raccoons. So they were all here at our house over the weekend. And of course, we're talking about all sorts of stuff, vehicle maintenance, home repair, apartment repair. And of course, I make the dad joke, well, all you really need is a can of WD-40 and some duct tape. You're fine. They got a kick out of it.
Okay.
They like the dad joke, right? So I thought to myself, there's got to be a way we could tie in WD-40 and duct tape into Two Dads on Money.
I think it's a great idea, and somebody in our chat just said we can use WD-40 to repel raccoons.
You could.
With a lighter.
With a lighter. That is true. See, look here. We even had some here at the office, right? Just like it can work with everything. So, but so we were talking about that, but then I started to think about this a little bit.
Chat wants to know if they're invited to the wedding.
Just come on.
We'll stream it.
We'll stream the wedding live.
You know what? The price of admission won't be much.
But it'll just be enough. Just to cover John's wedding costs.
That's right.
Which somebody in chat says is going to be like $125,000.
So I will be crying at the wedding for more than one reason. It'd be a very happy moment for our daughter, but I'll also be crying because I'm writing the checks.
Right. See, it's interesting. I've already told both my daughters that I'm not paying for anything. So if they want to get married, that's all on them. But I will put money into a savings account for them.
Yeah.
But they have to pay for their own wedding. I'm not paying for a party, right? Yeah. So I told my daughter called yesterday, my oldest daughter, she called yesterday, and she's very upset because her stepsister is getting married like in 2 weeks. And she's now been invited to be the bridesmaid. She goes, "Can I get out of this?" I was like, "No, you can't get out of that." No, you've got to go be a bridesmaid. And she has to buy her own dress, which is, the whole, well, that's part of the deal, right? So she's trying to figure out how to go pay for her dress and go be in this wedding. She goes, "When I get married, there's gonna be like 3 people at the wedding, and that's it." I'm like, now you're on the right track.
See, and I love Moto Marty in the chat says WD-40 and duct tape make an excellent wedding gift. That is so true.
It is true. When my daughter left for college, we put her a little toolkit together for college, right? Just a basic set of tools like a pair of pliers, a couple of screwdrivers. Guess what else was in there?
WD-40.
And duct tape.
That's it. See?
It fixes everything.
It does. So it's like there's got to be a way to tie this into the show this morning. Now I guess we're going to have a ton of people at the wedding. You know what? Come on. My wife won't mind. Just
good question in the chat, which is, when do you believe a prenup should be used for a first marriage? You only need a prenup if you have assets going into the marriage, right? So, and that's very important. So, I mean, if you're getting married, and generally you see prenups more in second marriages because people learn their lesson in the first marriage. But generally, when you get married young, don't have a lot of assets. So, if you're, I'm sure like John's daughter and her fiance, they probably don't have a lot of assets between them. They're just getting started out.
Just getting started.
Yeah. So, really not a reason for a prenup there. Now, the thing about a prenup is also this: you're kind of going into the marriage expecting it to fail, which is not a great. If that's kind of the first kind of red flag. It's like, I'm marrying this person, but I need a prenup, and then, specifically, you don't have any assets. But if I'm going into a marriage, and generally this is in second, third, fourth marriages, you'll start seeing prenups show up because, an individual has accumulated some assets of both sides, right? And I see this a lot when 2 people get married. She's very successful or he's very successful, or they're both very successful, and they'll come into the marriage and they're like, "Okay, great, we're gonna have a prenup. What I'm bringing into the marriage is mine, and what you're bringing into the marriage is yours. What we develop together is ours." And this is particularly the case in Texas, where it's a common law state. Community property state, also common law. So that's where a prenup is most useful. And then, of course, it's very important that once you do the prenup and you put those in place, that you adhere to that prenup, because if you start commingling assets in the marriage, you'll break the prenup, and that prenup won't stay anymore. So you don't start pooling assets together out of the separate accounts. So you keep those separate accounts, very separate accounts, keep all that money very separated, so that in the event of the divorce, when the prenup comes into play, then there's a clear definition of whose assets are whose.
Yeah, because it could be very easy to kind of what they say pierce that prenup, where the prenup is
very easy,
where it's no longer valid.
Yeah.
In fact, I just had a conversation yesterday with a client who they were just remarried, and so this is their second marriage, and going into the second marriage, they have a prenup in place. Right, so I don't really see prenups used when a younger couple is getting married, because they're getting started. They don't have a lot of assets built up at that point. I typically see it if somebody is getting married for another time. If it's a second time, third time, whatever that is, that's usually where I see that put in place too. And it can be very. It's like you're going in. I haven't really come across anybody that wants or expects their marriage to fail. But it's just but at that point they've accumulated assets, and they're, in a way, they want to kind of protect themselves a little bit too.
Well, no,
I get it.
Look, I'm not saying there's anything wrong with a prenup.
Yeah, sure.
Because
no, not at all.
Again, a marriage is nothing more than a partnership, right? It's just like if you and I are going to form a business and we're going to have a partnership between the two of us, we're going to have a bunch of legal documents that state out what that partnership agreement is. And we don't really have a partnership agreement for marriage, right? We have a marriage license that says, hey, you're now married, and there's all these laws that apply to that. But you don't go into a marriage with a defined set of terms that says, this is what I expect from you. This is what you expect from me. And maybe if we did that, we would have much more successful marriages, because a lot of these expectations would be understood up front as to whose roles are what, et cetera. All these concerns. Again, one thing we've talked about here on the show before is that, the two biggest problems with marriages that lead to divorce, and why divorces are over 50% now, is infidelity and finances. And as we've said before, if you're having a lot of trouble with your finances, there's probably going to be infidelity at some point. And so because of the stress, you're unhappy, and it's very easy to fall into that infidelity trap at that point. But again, if you have, this is, when my daughter's in a very serious relationship now, and we're starting to push them towards going to couples counseling to talk about, great, if you're going to get married, then you need to have good set boundaries around whose roles are what, how you're going to handle finances, what your expectations are around finances, those type of things. Have that understanding up front. And so again, maybe if we had better legal, partnerships in business tend to last longer because you have very defined agreements about what happens. Maybe we should consider having marriage agreements that define these things so that people have an understanding going into the marriage about what their jobs are.
So, if you had to own one stock forever, I know you're going to love this question. Which one is it?
One stock forever, and that's
This is not a recommendation.
I can only buy one stock, and I cannot sell it, and I have to own it forever. Problem is, no stock lasts forever.
Yeah, that's true.
So I guess define. So let's say this.
Let's say the next 30 years.
Next 30 years, honestly, I would just buy Berkshire Hathaway.
Yeah.
Or the S&P index, one of the two. And the problem with buying one stock today, a very interesting story out today, right? So Meta, if you ask me what stock would you buy today, it's like buy Meta, buy Google, right? For the next 30 years, buy Google. It's pretty much they're going to dominate everything. So, but things can change. A good example of that today, there was an announcement today. A lawsuit is being filed against Meta for addiction. So a lady's has filed a lawsuit against Meta claiming that they intentionally issued a product that addicted her as a child, and she is now suing for the negative ramifications of that addiction over time to her social media.
Oh, my.
No, hold on a second. This is the same lawsuit that happened with the cigarette companies.
So you're going to have a class action lawsuit.
You will have a class action lawsuit out of this because the cigarette companies intentionally knew that they were providing an addictive product to their user base. Meta, all these social media companies intentionally knew that they were building algorithms that were addictive to their user base. This lawsuit will actually turn out probably very close to what we saw with the cigarette companies, which will be billions of dollars worth of potential settlements for damages if they can be proved, which is certainly going to have an implication to how social media acts in the future. So what my point about this is be careful with this narrative of, what one stock can you buy forever? Things can change. And something could come out of this lawsuit that requires a change to social media that actually breaks this addiction for users, which then makes it not as advantageous to advertise on, and then becomes a problem for revenue growth, those type of things for these companies. So again, that's why if you say, if you're going to pin me down and say, what one thing would you buy and hold forever? I'd buy the S&P index fund. It's not sexy, it's not pretty, but it's going to survive the long term. Things can change. But right now, if you said, it has to be a stock, I'd buy Google. So for now, but again,
but that could change
30 years,
tomorrow.
It could. I mean, regulations, some other type of thing comes along, it can change. That's why it's a very, very hard. But again, that's also why, my alternative would be Berkshire Hathaway, because it's a diversified holding company of other companies that will likely survive regardless. So again, they're kind of, there you go. Okay.
Keep in mind, don't run out. That's not a recommendation.
Yeah, not a recommendation.
That's for fun, entertainment.
Exactly. Entertainment purposes only. I would not buy and hold one stock planning to hold it forever. So
yeah.
I may wind up holding stocks I own forever, but I don't plan on it. Mike, this is kind of the interesting thing. This whole trade this year so far, the chase for industrials and basic materials, and these kind of more infrastructure type companies are all based on this idea of a reflation trade. Yet, what Trueflation is suggesting is that there may be some quote unquote trouble in paradise. That, and again, ADP employment reports as well at 22,000 jobs. There may be a bit of a disconnect between the reflation trade and the actual strength of the economy.
Yeah, and that's what's bothering me. As I'm kind of thinking about what the next 3 to 6 months holds, and I'm looking at all these factors, the reflation argument, not necessarily with inflation, but just really strong growth, makes some sense to me based on some of the data we've seen. The ISM manufacturing index was very strong. It was a large move upward. So sentiment is improving. All the economic data seems to be fine. But the problem with Trueflation is it's plummeting. It's not just gradually falling. I mean, it's fallen over 1% in a month and a half. That's telling you prices are coming down on the prices that they measure, but there's something else happening. Why would prices fall so fast? And that's kind of what I can't get my hands around. Typically, the bond market would sniff something like this out. You would expect the bond market to rally a little. Bond market has been dead. It's just yields are flat. They're going nowhere. You get good news, bad news. Maybe they move a tiny bit, but it's almost the exact opposite of the volatility we saw about a year ago. Bonds are just, they seem to have found their yield. It's like a tug of war. Both sides are equal. They're just, the rope isn't moving. The flag in the middle isn't moving. And it's like they don't see this Trueflation number, or they're just torn between Trueflation, maybe savings, consumer spending, some of the stuff you said, but some of the other arguments about reflation. And it's just happened to be stuck where it's at. But the thing with Trueflation, as you showed in that graph, is we should see it in CPI by February, March, maybe April at the latest. And we know CPI lags. See, if you just go into the CPI information pages, they tell you that energy is 2 to 3 months lagging. We know, we've talked about this ad nauseum, that shelter prices lag anywhere from 6 months to 2 years. And we're grossly overdue for lower shelter prices, knowing what we already know, knowing what's happened in the economy. So, back to Warsh, this is one piece of data that the Fed, I'm not even sure this is Warsh's problem, because he won't be there till May. This may be Powell's problem, because if Trueflation proves to be a good leading indicator, we should start seeing CPI fall off pretty quickly, which means that Powell may be the next one to cut rates, maybe even twice before Warsh steps into the office. So, Lance, it's kind of odd to see one piece of data that's really just grossly out of whack with everything else, but it's a very not trusted, but it's a very well-calculated piece of data, very thorough. And, it's, I can't remember seeing something that's just that far out of the norm in a long time. So definitely bears paying attention. Maybe Trueflation will just pop back up. Maybe it was kind of some seasonal type activities that overly affected Trueflation with the holidays and then the new year. But it is interesting. And, one of the things that's kind of been leading Trueflation, energy prices have been weaker. They've been a little more volatile, weaker, but recently. But again, CPI lags a couple months. So Trueflation is picking up real energy prices. CPI is still dealing with November, December. Food inflation is rolling over. In fact, I think it was Frito-Lay. Do they make Doritos? Whoever makes Doritos and some of the other products, they're cutting prices. So Doritos are cheaper.
Fritos are cheaper too. I just bought a bag yesterday because we had chili.
Yeah, nice. Was yesterday your cheat day?
Yes, it was actually. Well, it was turkey chili, 99% fat free. So
with Fritos.
Yeah, it was a very small portion. Yes, of course. No beans. Who eats beans in chili? Who eats beans and chili? You know who eats beans and chili? Yankees. Exactly. I bet
What's
Mike
wrong
eats
with
beans
that?
and yeah, see right there, he eats beans in his chili. Nobody eats beans and chili, not real
Of
men.
course you do. You put those red kidney beans in there.
Yeah, only you New England pansy people. And,
I'm not from New
Texas. That's where you live.
No, it's not.
You're up there in the eastern corner over there by D.C.
Okay.
Real men eat.
Okay, you southerner. I wanna thank at Bagged Up. He wrote, "Chili without kidney beans isn't chili."
He's also
And
from
he's-
South Carolina.
and
That's
he has the
not
history.
Texas.
His family traces to the American Revolution in South Carolina. He
Exactly.
ain't no
South
Yankee.
Carolina.
He's no Yankee.
He's
Lance.
not from Texas, right? It's all you people on the East Coast that are over there, eating kidney beans in your chili. So
There
at
was
Bagged
no
Up falls
Texas.
right in there with the same as you Marylanders.
Back in the day when we had colonies, when it was the real America, there was no Texas, Lance.
And that's what I'm saying, though. That's why real Texas chili comes from Texas. So that's all I'm saying. So
I got you.
anyway,
You Texans.
why don't you just throw some broccoli in there while you're at it? I mean, you might as well just go all the way and make it a vegetarian chili at the pace you're going.
Wow.
the unchili, exactly.
Says the guy that's using turkey instead of beef. Come on.
Well,
That's
this
not
is
very Texas.
you know what? I'll go with that one. I will agree with you there, but I do have to watch my diet. So my trip to Italy's coming up. I've got to be speedo ready. All right, that wraps up the show for today. Thanks so much. Be sure and like and subscribe to the channel. Give us that thumbs up. Certainly helps us a lot. Be back here tomorrow with John Penn for Two Dads on Money. Y'all have a great day. All those articles are posted on the website right now, realinvestmentadvice.com, Substack as well. It's there for you also. Anyway, y'all have a great day. See you back here tomorrow for the next edition of the Real Investment Show.